But that leads us to cryptocurrencies. And crypto has obviously been a very interesting area. It's not an area that a lot of our clients understand. This is the price chart for Bitcoin in US dollars going back over the last year. A big run up, and certainly pulled back and consolidated, tipping higher again. If we take a longer term picture, going back to 2013, what a ride this has been, from $2 to $37,000. But we know every time it's had a big run up, it's consolidated, run up, consolidated, run up, consolidated. And actually, this fall, we only just broke out again, or actually just about 2 months ago. So this is an area we've been watching closely. When it started to come out of this consolidation midway through last year, we got involved for the first time. Now, it's very difficult for most private investors in traditional accounts to participate. So in the last year, we finally have seen the advent of a couple of Bitcoin ETFs that trade on exchanges. So today I have Fred Pye with us on the phone or on the line. Fred is CEO of 3IQ. I've known Fred a long time. He has been a career star in the investment management business. And I've known him for many, many years. I followed his toils in trying to build a platform to make investing or participating in cryptocurrencies more accessible. And so because a lot of our clients really don't understand this very well, I thought it would be worthwhile to bring him on the line today. And so I want to welcome Fred, and maybe we could have a little chat about this. Fred, maybe you could tell us a little bit about your journey.
Thank you, David, for having me. And I do expect to spend some good fun time today telling you a bit about our journey. But as David mentioned, we've known each other for a long time. And in the interest of full due diligence, I am a client of Barometer. I'm a big fan of what they do. I've had a man crush on David for easily a decade. But David has seen the trials and tribulations of what we've done. I was at a firm called Landry Investment Management. We had developed a multi-asset momentum algorithm that we were trading, but I just noticed that everything was completely correlated. And David and I always spoke the same language of looking for non-correlated assets, invest in the top things that were performing. And Bitcoin, funny enough, has been the best performing asset of any asset in all of history in a 10-year period. So I was intrigued, but it took an awful lot of work, and it took some work to be able to bring this to market. So quickly, what I'd like to do is, David, if you'll let me share my screen here.
Absolutely, you go right ahead. Fred, I know there were many times when you must have questioned yourself going through this process, but congratulations to get to where you are.
I would say my wife questioned me a lot more than I did, and that'll bring up my first story. Is many years ago, and the funny thing about Google knows everything about you. So it knew that I was interested in Bitcoin and I owned Bitcoin, but it also knew that I was a chef, an amateur chef. So I get this email one day from Google, or the spam from Google, saying, chef knife, Japanese carved steel chef knife, beautiful chef knife, only 1 Bitcoin. And I go, that's easy. And I just click, and 2 days later, in comes this beautiful redwood box with this beautiful Japanese cooking knife. And I'm staring at it, and I'm so excited about this knife. And my wife looks at me and she goes, you didn't spend $300 on a cooking knife, did you? $300 on a cooking knife. I said, no. I said, just 1 Bitcoin. She goes, oh, I don't get this Bitcoin thing. Well, at Christmas that we just passed, I'm carving the turkey at Christmas. And she goes, how's your $40,000 US cooking knife, you dumb lummox? Now she understands Bitcoin. So I'm going to try and spend a little time today, and not a lot, just jumping through the things. And the easy part is I usually start, and I apologize if this is overly simplistic to a certain extent, but I always used to tell people, can you explain to me this digital currency stuff? I said, well, if you take a $100 US bill and separate the serial number from the paper, where's the $100? It's in the serial number. And if I can put that in my phone and instantaneously and securely give it to somebody else, that's a digital currency. And that's really what happened. And when people say, well, I'm not going to buy Bitcoin until I can buy coffee at Starbucks with a Bitcoin. Well, like you don't buy a cooking knife with Bitcoin, you don't buy a coffee at Starbucks with Bitcoin. You will use digital Canadian dollars, you will use digital US dollars, you will use digital yen and euros. So money will be going around the world instantaneously and for free. So when David saw me challenge this, he may not know this part of me, but I've been here before. In 1983, I was working for a company called Guardian Trust Company, and Howard Kelly said, you know what, we should list our gold, platinum, and silver certificates on the Montreal Stock Exchange so investment advisors can then get access to gold, silver, and platinum, because now they can all they can do is come to the bank and buy it with cash. So we went to the Quebec Securities Commission and said, we'd like to list our gold certificates on the Montreal Exchange. And the regulators go, hang on a second, those are non-traditional custodians. It's volatile, it's speculative, and it's used for criminal purposes. And so finally, after 3 years, we convinced them that gold was important for people to put in their portfolios, and it got approved. And today, some of the biggest ETFs in the world are gold ETFs. So we started on this journey back in 2014, and it took us 4.5 years and over $5 million and a real grind. And finally, we got approved. We went to court last summer. We got approved in October. We tried to build a syndicate in January, and now we've got a prospectus. It's approved. It's ready to go. We go, what could possibly go wrong? Well, apparently the global pandemic was a checkbox we didn't check off in our risk categories. And we launched to very little fanfare at a $15 million Bitcoin fund. Having said that, today we just crossed over 1.4 billion, and in 9 months is the single fastest growing organic investment fund in Canada in history. So we're very excited about that. I'm going to take a quick step back and talk to you. The way I explain people to is I explain to them about the internet. Everybody thinks the biggest single largest technological investment of our lifetime is the internet. Well, the internet, it's true. It was started in 1971 with the TCP/IP transmission control internet protocol, and that was designed by the US Defense Department to let two computers speak together. But it wasn't until 1982 till people got the SMTP, the email, which was a simple mail transfer protocol. And then 1989, the World Wide Web was born, and the information superhighway with HTTP and HTTPS, where you could now, oops, sorry about that, I'm having a glitch. Okay, it wasn't until you could jump from one website to the next, and then came the big granddaddy, voice over internet protocol, where you could actually speak from one person to another. It just wiped out long distance phone calling. Then was text messaging, which is basically wiped out email with every kid on their phone, text messaging every day. But then in 2001, the BitTorrent protocol was created, and that was the precursor to live streaming, Netflix, everything. The way people absorb communications today is very different than it used to be. So if you follow what's going on here, the internet is nothing more than a series of computer protocols that use an unsecured network called the internet. And it wasn't until 2008 the Secure Value Transfer Protocol was invented and created that allowed you to now transfer ownership, value, title, and money over the internet instantaneously, securely, and virtually for free. And that is also known as the Bitcoin blockchain. Bitcoin is a value transfer protocol for the internet. So yes, it may have taken you 15 years to get your Netflix account. It may have taken you 15 years to get your first email account. Yes, it could have taken you 15 years before you stopped paying long distance phone bills. You will start using the blockchain to transfer ownership, value, title, or money. So let's see, what is it worth? Well, if you take a look at the internet facilitates unsecured free movement of information. And it sits on what we call a free protocol layer, which is the TCP/IP. So who made money on the internet? Google, Uber, Amazon, all the big internet companies all made money on using a free protocol. Well, when we take a look at the blockchain ensures secure movement of value, ownership, title, or money. So what is worth more? Unsecured movement of information or secure movement of ownership, value, title, or money, meaning every real estate transaction, every medical record, every auto license, everything will be embedded on the blockchain for secure access and secure movement.
Right. Even all of the ports now are securing the shipping freight using blockchain, so they know where it came from, they know where it's going to, for those purposes. Is that right?
Exactly. FedEx is the single largest user of blockchain technology today. And what they do from picking goods up from a manufacturer and delivering to the end user, and that entire service train is tracked on the blockchain, which includes signing off on receiving the package and instantaneous movement of money back to the supplier. So once everybody signs off, the money is moved instantaneously, securely, and for free. Okay, but the applications can be created by a 14-year-old. There's no barriers to entry, so you're not going to have. Now the difference is the applications have to pay to get access to that blockchain. So whether it's Bitcoin or Ethereum or Cardano or NEM or any of the other blockchains, they have to pay. And this way you get to own internet. So just imagine how rich you are today if you owned email and somebody put a stamp of 1/10,000th of a dollar on a stamp on every email ever sent. It's the calculations are immeasurable. So what we want to do is take a look at really what's happened in the last year on Bitcoin, because Bitcoin really had a breakout year this year. And it starts from many different things, of different people, different hedge fund managers coming in here. I should put here, Barometer invested in here too, because that clearly was a catalyst for the movement of Bitcoin. But many of the biggest investors in the world invested. And one of the biggest reasons they also invested, and this was rougher, December, it hit an all-time high price of 40,000 US dollars just at Christmas. It's pulled back since January, which is perfectly normal, but we believe it's going higher because more and more people are embracing it and understand it. But the one thing, David, which you talked about before, which scares the living bejesus out of everybody, was what we saw in 60 Minutes, where Neil Kashari says there is an infinite amount of cash at the Federal Reserve, meaning they can print as much money as they want, which means you don't want to own
Cash.
Fiat currencies. Now, if we take a look at the last 10 years, the best performing asset class in 8 of the last 10 years was Bitcoin. And it was the worst performing asset class for 2 years out of those 10. But after a year of a 5,200% return, and after a year of a 1,300% return, Bitcoin has now matured. It is a lot less volatile. It has a lot more buyers and sellers. Its demand is going straight up, and its supply curve is horizontal, which always bodes. You don't have to be London School of Economics to know that flat supply and strong demand leads to a higher price. So on that note, David, I thought maybe we would just open it up for questions or answer questions you think your readers.
So yeah, I have a thing I'd love you just to talk a little bit about. My concern has been that every central bank in the world is trying to create some inflation in asset prices to offset the liabilities that they all have, this debt. And as you mentioned, Cascari made the point, we have an unlimited amount of cash, we'll just keep printing it. And so what we're trying to focus on is things that have a limited supply, because if demand goes up and there's a limited supply, then we know prices go higher. So when I talk about looking at commodities, we know there've been no new copper mines built for several years. So that bodes well. We're in a deficit of copper. Probably prices go higher. Companies make a little more money. They pay us a dividend. Freeport-McMoRan, our second biggest position today, reinstated its dividend and bumped it. So that's really attractive. Maybe could you talk a little bit about the limits on supply of Bitcoin? Because I'm not sure everybody understands this, as to how many Bitcoins there will ever be and why there cannot be any more.
So there's really three reasons why people buy Bitcoin in a portfolio such as yours or individually. And number one would be is they understand the technology and they're willing to invest like in any other technology stack that this is going to work. Number two is people understanding the supply and the demand features. And when we talk about supply and demand, right now, the best way for me to talk about scarce assets is gold is always known as a store of wealth and has a scarce asset that grows at 4% per year and has done us well for a hedge against inflation over the last 100 years. So the US dollar is down 99% and gold has protected a lot of people for that inflationary destruction of their cash. Having said that, Bitcoin also today grows at 4% per year. But in the computer program that runs Bitcoin, every 4 years, that supply growth rate drops in half. So today, Bitcoin grows at 4% per year, just like gold grows at 4% per year. But 3 years from now, Bitcoin will grow at 2% per year. And then Bitcoin will grow at 1% per year. So your supply curve is decreasing until it's virtually flat. And if you have strong demand, meaning if there's strong demand for people to put secure transfer of money, if money is going digital, we need to be able to make sure we understand and protect all of that. And that's why people are using Bitcoin as a store of wealth. The others is non-correlated. A lot of people say, why do I put it in? Because as you can see, Bitcoin does not behave like anything else. It is both a risk-on asset, is a technology play, and a risk-off asset. Some of the biggest movements in Bitcoin came when North Korea was firing missiles over the bottom of Japan, when inflation in Argentina hit ridiculous rates, so people in Argentina were buying, when there is a military coup in somewhere like Nigeria, when people are looking for a store of wealth and they don't want the government to steal their money, they're going to Bitcoin.
Right. So all very interesting things. And I would make the comment that while the growth in Bitcoin supply may be slowing, certainly the supply of fiat currency is accelerating. And that is one versus the other. We have a question from one of our clients asking me really how Bitcoin can fit with the Barometer approach. And I think that the answer that I would give just off the hop on that is that as most of the folks on the line know, one of our strategies is a global macro strategy, which is, to be clear, can be in any asset class, long or short, with a goal to own complementary assets. And so whether it's commodities or real estate or currency or emerging markets or domestic markets, Bitcoin would fit in that bucket. And we bought Bitcoin originally last summer, and of course have had a good run with it. But it really started to accelerate when many of the other sort of weak dollar assets started to accelerate, and it's one that we're in. We also have a little bit of Ethereum in the portfolio. So that leads to another question, which one of our clients has asked, and that is, can you just for a second talk about the difference between Bitcoin and Ethereum, and the use cases for Ethereum, because they're quite different.
They are, and Bitcoin was originally created as a peer-to-peer movement of money. And although their Bitcoin blockchain, which is the most powerful secure computer network in the world, the second most powerful secure computer network in the world is Ethereum. And Ethereum was created to provide easy access to embed transactions on a blockchain. So Ethereum, I like to say Bitcoin is the movement of secure movement of money. Ethereum is the secure movement of everything else. So if you're going to put Toronto waterfront real estate on a blockchain, meaning where people can buy it instantaneously, buy the real estate, all your legal agreements are all embedded on the blockchain. All you do is send them some Ethereum and you end up with your real estate condo, which is where it's going. And there is a company called Key doing that in Toronto right now. Ethereum is the blockchain of everything else. Okay, there are another 2,000 blockchains that are desperately looking for a use case. But right now, you've got Bitcoin as the granddaddy, you've got Ethereum as copper, meaning the entire infrastructure will grow with Ethereum. But the other emerging blockchains are coming up, but we're still too early for a lot of those for people like you and me, David. Yeah.
So one more thing. I think about the internet as being transformational because it disintermediated so many industries. So, I used to watch my father come home from work, and he had a manufacturing business, and he spent his time talking to distributors, people who knew a whole bunch of clients who could use his product. And so he would sell to these distributors who would warehouse it and sell it out to their customers. And when the internet came along, it sort of disintermediated so many industries and cut out the middleman, right? You were able to ultimately go from the seller to the customer, where we are today. When I look at Bitcoin and Ethereum, I see that again as cutting out the intermediary. We all use banks because we need somebody to stand between us and the other side of a transaction. Or we need a real estate agent to complete a real estate transaction to make sure all the paper gets filed and the money goes into a trust account and finds its way to the other side. But there's a big friction cost. I've never understood why it's 6% for a real estate transaction. So could you talk a little bit about how this, again, sort of disintermediates and takes friction out of the economy?
Well, that's really the big disruptor, and people have to and it's not going to happen fast. So just because we started talking about this 4 years ago, but I'll give you a few examples. Number one, it disintermediates everything. Lawyers, notaries, but the big one is banks. It does disintermediate the banks. And the example is, and the reason why the Central Bank of Canada won't create a digital Canadian dollar is because their banking system isn't broken. It's expensive, but it's not broken. But for example, stock markets, you will be able to then trade stocks peer-to-peer. If David is selling 1,000 shares of IBM, there's 500 people that are buying shares of IBM, and that transaction gets done instantaneously, securely, at very little cost. And to prove that, we have built at 3iQ with our company, our joint venture partners, MavenNet, QCAD. So we do own Canada's first digital Canadian currency. And we were doing a demonstration between an asset manager and a major Canadian chartered bank where we did a $4 million bond trade. The bond trade settled in T+3 seconds. And that $4 million bond position moved in under 3 seconds, and the $4 million moved in under 3 seconds as well. And the cost of that transaction was 0.2 of a penny.
So think about that in relation to what happened over the past week, where the Robinhood investors all piled into the same stock.
Yeah.
And from a regulatory perspective, the risk to Robinhood was what happens if these people don't settle their trade? So they had to lodge additional capital with the clearing agent so that the clearing agent was comfortable that there was enough collateral there if the trades failed. And this is one of those things that ultimately long-term, you're going to take some of those risks out of the system. So I don't want to spend too much time on this. I'm just looking one more question. And this is a tricky question I'm asking you because it's hard to explain quickly. Can you just explain why the blockchain helps to secure a transaction? What is the blockchain, and how is that actually securing the transaction?
Yeah, so when we do our webinars, and we are doing one tomorrow, and you can go to our website, 3iq.ca, and join up, Fred. We're not doing the introductory webinar. I've spent 4.5 years going across Canada. And I actually pull the blockchain up on the internet, and people see how powerful a computer network it is. It's powered by over 40 and protected by over 40 million computers. And really what it is it's a ledger. And that ledger, so if Fred has 1 Bitcoin and David has 1 Bitcoin, and Fred sends 1 Bitcoin to David, there's at least 400,000 computers that are powered by 40 million computers that change that ledger. Whereas if you go to Royal Bank and say, I'd like to withdraw $40,000, and Royal Bank says you don't have $40,000, and you go, yes, I do. It goes, no, you don't. Whereas there's 400,000 computers all over every corner of the world that knows that Fred gave David 1. And Fred now has 0, and David has 2. And you cannot, all 400,000 of those computers have to agree all the time. There's never been a fake transaction put on the Bitcoin blockchain.
So you can't fake it, because if X number of computers all say that it's so, it's so.
Exactly.
Right. So that's always an interesting concept. Okay. So Fred, I really, really appreciate you coming on. I've got a couple of things just to do to wrap up. You said you have a webinar tomorrow.
We do.
If somebody wanted to go watch that, how would they go watch that?
Go to 3iq.ca. You'll log in for registration. It's at 12 noon tomorrow, and it's going to be fun. It'll challenge people a little bit if they're really looking for an introduction. But David, this has been great. I really appreciate it, and happy to do this again on a group basis again with your clients.